Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Monday, March 13th, 2023. Before I click on the charts, I just want to encourage you to please click like and subscribe. Please share the content with friends and colleagues if you would. Also, check out wickedstocks.com. We put out a lot of good stuff every day. The Daily Triple Q, the Daily SPY, 2 individual stock picks every week, as you see here in Tesla. Weekly S&P 500, weekly NASDAQ 100, and the weekly TLT long bond that you'd really never see on YouTube for a decent monthly subscription price and a 5-day money-back guarantee. So check us out at wickedstocks.com. So here we go. Excuse me, gravelly voice here. This is the monthly chart, weekly chart. We'll start with the big picture and work our way into the day itself. We came off this 71.79 to 83.49 channel structure in early January, still anticipating 241.08 after we settled above this band of channel support, former channel support. In the 140s, 150s, presently 147.50 to 155.61. So despite the 2 to 3 week sell-off, which we've indicated actually, and I'll get to in a moment, we still think, we're back to more like 2 to 3 months now. After a full month into that 2 to 3 month buy signal, we are more than half the way there, and then we've backed off. We did have a sell signal about a week and a half ago, 2 weeks ago almost, when we settled below this rising channel bottom that is presently at 201.48, then indicating the 2/3 speed line. At the time, we were indicating this band of channel support, but at that time, it was actually coinciding with the 2/3 speed line. So I give these line studies, these two areas, equal weight. 164.86 you'll see as 3-star. It is the 148.53 to 156.93 area that is our 4-star zone. And that is the daily chart equivalent to what we see on the weekly chart here, 147.50 to 155.61 all week long. So back to this image. 164.86 can contain weekly selling pressures, and quite possibly, as I show in these arrow sequences, quite possibly into April trade. We can bottom out fully at 164.86, not only for the week, but even into April trade. From here, we can rally up into the, it's this descending speed line presently at 200.11 that I'm giving as our upward pivot point into April. If we were to close above the 200.11 descending speed line, it would indicate 221.25 within a couple of weeks, and quite possibly by the end of April, that long-term objective that still exists at 241.08 on the weekly chart. So that is kind of the big picture. And, you can play this. It depends. It means different things to different people. Of course, if you're a day trader, you're aggressively buying 164.86 and then maybe holding out for 175.50 for the day itself. Possibly 182.64. I don't see that happening within the day. In other words, I don't see us testing 164.86 and then rallying up to 182.64 within the day. But the 3 to 5 day swing trade, that's more like a 1 to 2 day swing trade, buying 164.86, selling 182.64. If we close above 182.64, and I can show that here, that is a descending 1/3 speed line that is based, it's a new one, based in part on Friday's low, using also the February high. So this is what I'm seeing now for the next day or two. You're buying 164.86, not until we get above 182.64, that is to say, close above 182.64, do I see a good low for the week. The market then likely, possibly within 3 to 5 days, rallying up to the 2/3 speed line that is presently at 200.11. So you can see here 182.64 is a session containment level. It also has an up pivot point. In other words, if we close above 182.64, we have a 3 to 5 day buy signal to 200.11 where we could top out for the week, and possibly, I could have drawn another red arrow coming down here, but I really want to emphasize the fact that we're still in sort of a bottom picking mode here with regard to Tesla. Bottom picking meaning 164.86 is the next. I have it as 3-star only, but you could consider it 4-star. In other words, I've already mentioned how it could actually contain selling perhaps into April trade, given the longer term buy signal that still remains in effect above the 140s, 150s. So back to this image. Actually, I'm going to go back to this image and sort of sort of underscore the day itself. We've got 175.50 just above the market. That is the late afternoon pullback high last Friday. If we push through 175.50, 182.64 in reach today. So that is kind of the day trade. Holding below 175.50 will keep 164.86 in reach. So 175.50 is a soft intraday pivot point, pushing through it, 182.64 likely, where profits can be taken or a short can be set, because we can fall off from 182.64 not only through the rest of the day, but possibly into tomorrow, as we could fall back to the 164.86 rising speed line. This is good day trade material, so to speak. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Once again, holding below 175.50 will keep 164.86 in reach. Now at 164.86, for those of you who trade the 1 to 2 week, 2 to 3 week swing trade, and you're an option trader, for instance. So if you're not an options trader, you're just going long here. But if you're an options trader, you could look for 198, 200 out of the money calls that don't expire for at least a week or two. I know that the whole options thing, there's a lot of nuance with trading options. I know a lot of you love the short-term options that expire within a matter of days or a week, and those are really good speculative plays. You just need a kind of a volatile pop to the upside then to see those options sort of open up in value. Without that pop to the upside, the expansion and volatility, those things will die on the vine, so to speak. And that's why I'm always kind of emphasizing the safer call, of course, is to spend a little bit more money on an option that might not expire, say, for a month anyway, a 198, 200 call that won't expire until some point, say, mid-April, that will still have preserved delta, less immune to the element of time decay. So there's that. I'm not going to get deep in the weeds on that. Let's just go with the upside, though. Once again, closing above 182.64 does signal 200.11 and dropping daily within a matter of probably 3 to 5 days. On the way up, we've got 193.73 that can contain daily buying pressures, and that is there for those of you who are more comfortable with sort of the 1 to 2, 2 to 3 day swing. Closing above 182.64, 193.73 in reach. Now, I also will mention, I wait for settlements. You know this, I'm sure. In terms of the settlement itself, obviously, you're going to be buying the close. You're going to be buying minutes before the closing bell, right? And so if we're trading in the 184 handle, let's say 183 handle, and we're clearly above 182.64, that could be a market on close, or you could buy it at the market near the closing bell. In other words, I'm not suggesting that you need to let this thing close out above 182.64, and now you're going into the aftermarkets or the morning opening bell the next day. This is another nuance I'm spending a lot of time on. But this is sort of the structure here for the next week or two. And the downside, because I'm 8 minutes and running on this video, I don't really like to approach 10. The downside today, and I can go through more chart here and show you that, we've got a lot going on here. 163.91, 159.73. There are all these little levels that could capture not only intraday, but potentially daily selling pressures. And with respect to this descending channel bottom at 163.91, I have it as a minor point, but you could consider it a range of support that can contain daily selling pressures. And with respect to the 164.86 speed line, weekly selling pressures, if we, though, close below 164.86, by a reasonable margin, and I'm not talking 164.80 or 164.78, that's just really close to call, but let's say in the lower 164 handle, and certainly below 163.91, then we pivot south for the next few days only, as I would anticipate this band of channel support that I don't show on the daily chart anywhere. Actually, I do here. So this is what we would expect. I don't show the 164.86 rising speed line, but if we close below it, we have another 2 to 3, 3 to 5 day sell signal into this zone of support. And this, by the way, last thing I'll say, correlates well and increasingly so with the downside 5/8 Fibonacci. The 61.8% retracement is 146.06. You can see it in the very lower right. That will gain in importance as the week goes by, as 148.53 converges with it. And this is still going to be our zone of long-term support that may capture selling not only through April, but even the balance of Q2, and we can turn up from there. I will say last thing, very last thing, if we close below this area, below the 140s, 150s, then we're back to anticipating, yes, within 2 to 3 months, the 70s and 80s. And that is all I've got for this particular Wicked Stocks video analysis on your daily Tesla report. Please click like, subscribe, check out wickedstocks.com, and I'll be back tomorrow with another Tesla report.